The Kit Kat and Maggi maker Nestle is set to post its Q4 current year 21 numbers. That's the December quarter numbers. Overall, we are expecting a decent growth coming in from the company in its revenues, a double-digit growth, early double-digit growth. We could say 10.2% growth in its revenue is what we're expecting. Now, the revenues are expected at 3,784 crores, up by 10.2%, like I mentioned. Now, let's talk about the margins of the company. We have seen all the FMCG report their numbers, and margins have been slight bit under pressure. Gross margins obviously are under pressure because we are seeing a raw material price inflation which is coming in, which is impacting the overall margins. Increase in the cost does impact the margins, and in turn obviously the EBITDA margins also have been impacted. Now EBITDA margins for Nestle is expected at 21.4% versus 22.6%, so almost 100 basis point contraction is what we are expecting in terms of the EBITDA margins of the company, impacted obviously because of the raw material cost inflation. Now let's talk about the bottom line of the company. We are expecting a growth there of 8.2% coming in on a year-on-year basis as well, but overall margins, like other FMCG companies, is expected to be under pressure. Moving on, let's talk about what is actually leading to the growth. They're expecting, we expect a growth momentum to continue, which we saw last quarter. Year-on-year basis, almost similar growths are expected because now we've seen recovery coming back. Out-of-home consumption are also started improving in December quarter, at least you could say in the month of October, November, as well as first half of December, which was not impacted by Omicron variant. So that is something that impacted the second half of December, but that is something we'll watch out for in terms of commentary, that how did that pan out in December, and Q4, how was that looking in the month of January in terms of recoveries for out-of-home consumption. Other than that, broad-based recovery is actually what we're expecting in terms of the growth coming in from Nestle across the board. We're expecting a recovery. What we are expecting is also maybe new launches, maybe that could have also started seeing how is that pipeline shaping up in terms of commentary is something we are going to be watching out for. Now let's look at the important other factors to watch out for. Overall commentary in terms of how is the recovery coming in different trade channels, especially how is the recovery in rural demand is also important, because some of the FMCG companies had actually highlighted that rural had actually seen a bit of a slowdown coming in. So that is something that we'll be watching out for. New product pipeline, like I mentioned as well, and demand for packaged foods, how is that shaping up now? People have started stepping out. So what is the packaged food demand coming in is something we'll watch out for. Let's look at the valuations in terms of peer companies for Nestle. Nestle is currently trading at 74 times 1 year forward PE, that's FY23 PE, while it's amongst the higher sides in terms of valuation and P's when we compare to other FMCG companies, whether it's HUL, Marico, Dabur, GCPL. All these are the important companies which we are comparing it with. So surely valuations are a bit high. Other than that, brokerage radar, and what is brokerage saying is that Macquarie is actually maintaining a neutral stance, HSBC maintaining a buy rating, Nomura too maintaining a buy rating, while MS is maintaining an underweight rating. So mixed brokerage analysis is what is coming in as of now, but surely keeping an eye out on Nestle's earnings.